Hey everybody, Smart Silver Stacker here. Today is Tuesday, September 27th, 2022, and it was another rough day for markets. Most of the major stock indexes and a number of commodities started off in the green. Bitcoin at one point was up over 6%, back over the $20,000 level, but at the time I'm recording this video, we're getting close to the market close here, and pretty much all of those gains across the board have been wiped out. Metals more or less flat today, gold putting on a very small fractional gain, silver having less than 1% loss, so those are not too interesting today. But the thing that really I think we should be turning our attention to is the sell-off that continues in debt markets, as we're seeing the yield on a 10-year bond spike up to almost 4%. At the time I'm recording this, the yield is about 3.964, but it did get as high as 3.986. So very, very close to that 4% level. And in today's environment, you have to keep in mind that when you've got a $30 trillion national debt and most of that debt is financed with short-term bonds, those have to be rolled over. And every time the rate on that goes up by 1%, that is an additional $300 billion in annual debt service. And it's not going to take much more in terms of this debt sell-off before the service of the debt will be the largest item on the federal budget. Also, keep in mind that it's not just the national debt which has soared, although that is very high. I did point out in a recent video, the last time the federal funds rate was as high as it is was back in 2008, and back then the national debt was less than a third of what we have today, under $10 trillion. And so, it's a much different story when you have the massive level of debt that we have. But it isn't just the national debt. Individuals, corporations, businesses, they're all levered up to the hilt due to the artificially low interest rates that we have been experiencing for more than 2 decades now. And that is why I believe something is going to break if the Fed does not intervene in the market soon. And I suspect that that probably is what will happen. Something might have to break first, of course, so that they can have some kind of, expedient excuse when they do intervene. But there's simply no way that an economy as indebted as ours and a federal government as indebted as ours and, with the businesses as indebted as they are, that something is not going to break as we see interest rates being hiked in the way that they are, as we continue to see this debt sell-off and this spiking yield in U.S. Treasuries. And it is interesting to note that at the very same time that we are seeing this global debt bubble that has been in the works for decades now, as we are seeing that reach what appears to be a pinnacle. I mean, I believe that this strengthening in the dollar and this sell-off in debt is the harbinger of what may ultimately undo the whole system. It certainly feels that way. It's interesting that this is all happening at the same time that we are entering into this tremendous phase of geopolitical uncertainty. I mean, we have all sorts of escalations in the war in Europe at the moment. We had the recent Russian mobilization, and then even more recently, just in the past 24 hours, we've got these potential cases of sabotage against the pipelines carrying gas from Russia to Europe. It looks like the Nord Stream pipelines have lost pressure, and they're saying that there's a leak that may be caused by sabotage, and I don't know what form that sabotage would take, if it would be a physical destruction of the pipe or maybe some kind of a cyber attack that turns the machinery against itself. But that is the story in the mainstream media, and it doesn't seem like it's clear what actor might be behind this sabotage yet. But this is certainly escalatory, as the old saying goes, when goods no longer cross borders, soldiers soon will. And there was still gas flowing through those pipelines, even though the flow has been diminished significantly. There was still gas flowing through those old Soviet-era pipelines in Ukraine. And Gazprom also now is getting into some kind of a conflict with the Ukrainian gas company. And so at the same time that we're seeing potential sabotage against these pipelines, there was further legal conflicts between Gazprom and the West. And so, all of this is not looking good. And, as far as who the culprit is behind this potential sabotage, I'm kind of curious as to what you might think. I think it really comes down to the question of who benefits from this, and I'll leave you to answer that question. So if you have some theory on what is going on with these ruptured gas pipelines between Russia and Europe, let me know down in the comments below because I would love to know what you have to say. But again, it's very interesting that all of this is kind of coming to a head and coinciding all at one time. It was recently the World Bank was forecasting that there's going to be a major economic recession and catastrophe in 2023, and it's kind of looking like maybe we will get there a little bit early. Even if it does take a couple months for this thing to unwind, it certainly seems to be getting worse by the day. This reduction of gas to Europe, this could really be a problem. I know that I've been saying that for a while now, and it's been kind of clear that rising energy costs in Europe were going to cause problems for the economy there, but now it looks like the gas is done. I mean, there seems like there's going to be no more gas from Russia to Europe from this point on, at least if the damage to these pipelines is as extensive as is being reported. And that could usher in the kind of death knell, the final blow for these European economies, which were already under so much stress with the rising costs of energy. And if that happens, that could lead to the dissolution of the EU and, possibly the end of the euro as a currency. I mean, this is all within the realm of possibilities now, the way things are developing around the world. And these are things that, a year ago would have seemed fairly far-fetched, but in the light of what's been occurring over the past year now seems like, a real possibility. And so with all this uncertainty in the world, precious metals, the price level that they're at right now, they seem like an absolute steal. Now, I'm still not stacking right now because I think there might be more bargains coming up in the near future if we do get some kind of a collapse, and I want to be positioned properly for that. But if somebody out there watching does not have any physical, tangible, hard money assets at all, I don't give advice on this channel. I just tell people what I think and, what I'm doing. But if I was in that situation, I would absolutely want to get my hands on some metals at this point. Just some kind of a token position at least. So maybe if, worst case scenario plays out and we do get some kind of a global debt crisis or global collapse and the financial system stops functioning, which again is one of these things that is kind of far-fetched, but seems more and more likely by the day, then at least I'd have some kind of an asset that, has no counterparty risk and doesn't depend on the promises of bankrupt governments or, corrupt financial institutions. That's kind of my thoughts on what's going on. Like I said, it is sort of curious that all of this is coinciding at one time, but as to whether or not this is some kind of an engineered thing or if it's just sort of how things are playing out, I remain kind of agnostic. There is certainly something to be said about this being engineered because it is absolutely being brought on by the actions of the Federal Reserve and central banks around the world. Now, you could argue that they're just kind of caught between a rock and a hard place and they have to do something to try to fight rampant inflation. And the fact that, tightening is going to collapse the global economy is just sort of a, unfortunate side effect of that. But that, of course, is the result of all of the financial engineering that has been going on for the past several decades with, the artificially low interest rates, the malinvestment, the moral hazard, the large levels of debt, which were accrued as a result of these artificially low interest rates. And, now we're just sort of reaping the reward for having that kind of monetary policy, and we're beginning to see what the real effect of that policy is. Now, of course, none of these central bankers are ever going to admit that that is what caused this. They're always going to find some finger to point, whether it be saying it's Putin's inflation or, blaming the previous administration, or maybe they'll use Jerome Powell as a scapegoat if that's convenient. Who knows? All of this was somewhat predictable, and there certainly are people who have been warning about this for some time. But, based on the comments on this channel, I know that a lot of you out there believe that this is kind of engineered in some capacity beyond what I have just described, whether or not it's just the ineptitude of central bankers or whether there's something more nefarious going on. I'll kind of leave that to you to decide. But go ahead and let me know what you think in the comments down below. And I really just wanted to say a big thank you to all of you for watching. I really appreciate each and every one of you, and I hope you're all staying safe out there during these uncertain times. Happy stacking, and I will catch you next time. Smart Silver Stacker, out.